Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a sideways range in a wave 4 and then price to continue towards the upside. The minimum targets for wave 4 have been reached. Price-wise, the target area is the white box here, the 0.236 to the 0.5 Fibonacci, taken from the low of 2 to the high of 3. And you can see that the 0.236 at 92k was hit and also respected. From a time perspective, we preferably finish wave 4 after the vertical line that I have on my chart, which is a Fib time taken from the start to the end of 2 to the end of 3, which, as you can see, is also the case at the moment. If we then zoom into the 1 hour time frame and we take a look at the subwave counts of that wave 4, after which we then look for a 5 to the upside, then one scenario we do have to keep in mind is a triangle, where we then have a 3 wave A, 3 wave B, complex structure in the C, then we look for a zigzag structure in D, and another 3 wave move down in a wave E, after which we then look for continuation to the upside. So this scenario would extend the range in time. Now the invalidation is price taking out the high of B at 98.7k or taking out the low of C at 93.5k. And what is quite interesting here is the resistance we have to the upside as a potential target for your D, which is the blue box here between 97.2 and 97.5k. The support that we had identified when price was ranging sideways over here was nicely respected with the move to the downside here, good bounce to the upside, which then leads to this low here being the low of a wave C in this triangle scenario. Of course, after D, we then look for E. We will identify support then at a later stage for E, and then we move to the upside and continue the trend. Another scenario, which I have here on my chart, is a zigzag or flat scenario. So the count is basically the same because a flat and a zigzag are both counted as an ABC. It's just that the structure is different. Because in a zigzag, you're looking for a 5-wave structure to the downside in a wave A sideways WXY in B with the invalidation being the high, and then you look for a wave C to the downside to take out 90k. Alternatively, with a flat, you're looking for a 3-wave structure in a wave A, then a bigger 3-wave structure in B, preferably a double zigzag, ABC up, 3-wave correction, another ABC up, most commonly takes out the high, which is currently the all-time high, and then after your B, you move to the downside in C, where the most common target for C is actually taking out the low of your wave A as well. Now, which scenario out of these two has higher probabilities actually depends on your wave Y, because inside B, you then have a zigzag to the upside in W, then you have your wave X, which can be any corrective structure, but then your wave Y can be a zigzag, flat, or a triangle. However, in a sideways WXY, which is necessary for a zigzag, A, B, C, you need your wave Y to be a flat or a triangle, meaning A, B, C, or A, B, C, D, E, and then move down in your C. So as long as price is not taking out this low, and as long as we are not creating a triangle here, that scenario has low probabilities, right? Now, alternatively, for a flat, we need wave Y to be a zigzag structure. So we want to see a 535 to the upside. So from the low of X, we need a 535, preferably taking out this high here. The most bullish scenario is what you see on the chart, where we have a finished 3-wave corrective structure and we're looking for a wave 1, 2, and now a bigger wave 3 to the upside. Now in this case, this low here, as you might remember from the daily time frame analysis, was made before the vertical line on the chart. So it does impact the probabilities negatively for this particular scenario. And also, if this move to the upside here is a wave 1, then your wave 2 here is a very awkward WXY count with some running flats as well, which does generally not have the highest probability, as running flats are rare and not preferred unless other scenarios fail. If we then look at the CVD divergences, then a price since the low was made has been moving to the upside, supported by bullish CVD divergences, which is also what we like to see. If we then look at the news, then we do have some news today, Wednesday, December 4th, here 4 p.m. and 7:45 p.m. Central European time. So make sure you trade safe, as it can increase the volatility on the chart. And if we then look at the probabilities, then on a daily time frame, the probabilities are higher for the scenario that I have covered in this video, where we are looking for a sideways 4 and still price to continue to higher prices in a wave of 5. And on the number 2 spot, lower probabilities is basically any bearish scenario. Now on the 1 hour time frame, this range over here, currently a flat or triangle, have the highest probability, as a price since the recent low over here has not made a flat, meaning ABC, taking out this low, nor did it made a triangle structure so far. And these two are necessary to potentially count a zigzag in an ABC, so it's just not yet relevant. Now this gives probabilities to continue sideways / taking out the highs, and in both cases you would take all-time high first before then taking out this low. With sideways we mean the triangle A, B, C, D, E. Invalidation is taking out the low and you move up, and in a flat you're looking for price to move up first anyway and then only at a later stage come back down. The zigzag is only relevant if price can take out this low first before taking out the high. But at the moment, with the information that we have here, this is not a flat, and at the moment this is not a triangle. So we can't give a zigzag the highest probability. It's either a flat or a triangle, but both of these lead to price taking out the high first before taking out this low. Of course, we do have the bullish scenario that we keep in mind. So if price does take out this high, your bearish scenario is going to be the flat, and your bullish scenario, which we at least have to be aware of, is going to be an impulse and continuation to the upside. So we continue to observe the local structures carefully. Of course, with all the content I produce multiple times a day, we will have a very good idea of what is happening on the chart. So if you enjoyed this, make sure to like and subscribe, of course. Thanks for watching this video. Hopefully it was helpful or valuable. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.